Why do schools never teach us about money, about taxes, investing, or how to build passive income? Robert Kiyosaki, author of Rich Dad, Poor Dad, says it's not by accident, it's by design. He was raised by two dads, one rich, one poor. One had multiple degrees and a steady job, the other never finished school, but became one of the richest men in Hawaii. This is not just a book summary. This is a wake-up call, a crash course in wealth-building mindset and how you can escape the rat race forever. I started investing into the stock market when I was 18, but after 6 months, I stopped and used my savings to go to Ibiza with the lads. Huge mistake. If I would have kept investing £500 each month into a low-cost index fund, I would have been financially free at 40. This less than 15-minute book summary is going to give you the info I wish I'd had as an 18-year-old, so you can become financially literate and eventually financially free. Chapter 1: The Rich Don't Work for Money. When Robert was 9 years old, he asked his poor dad how to become rich. His father said, go to school, get good grades and find a secure job. But Robert wasn't convinced. Instead, he turned to his friend Mike's dad, his rich dad. The man wasn't rich yet, but he had a completely different way of thinking. Rich Dad made them work for 10 cents an hour, doing mindless labor. Why? To teach them how it feels to trade time for money. Robert hated it. He nearly quit, but that's when the lesson came. If you work only for money, you'll always be a slave to it. Rich Dad said learn to make money work for you instead. The rich make money work for them. This first lesson, learning to think instead of chasing a paycheck, set the stage for everything else. I'm a big believer in financial literacy, in fully understanding money. I was speaking to a 19-year-old at Jiu-Jitsu and told him what I'm trying to tell you. Learn about money now, and in 20 years' time, you won't have to work again because you'll be financially free. I said, imagine getting to 39 years of age and being able to do jiu-jitsu all day instead of work, or whatever it is you love to do. Let that sink in for a minute, because if you take on board the info I'm sharing in today's video, your financial future changes for the better. I believe this with everything I've got. Chapter 2: Mindset is inherited. Here's the uncomfortable truth. Poverty is taught at home. Not because your parents don't love you, but because they pass down old beliefs like family recipes, like money doesn't grow on trees. Poor Dad taught Robert that success came from job security. Rich Dad said job security was an illusion. True freedom comes from ownership. Kiyosaki calls this expired information, outdated beliefs that trap people in generational cycles of debt. The first step to breaking free: question the money advice you grew up with. Now, I've been an investor for the last 24 years, but it's been hard, and that's partly because up until 2019, I had the wrong money mindset. If you want to learn how to get your money mindset right, you can book a one-to-one call with me. See below for details. This is going to save you serious time and serious money. Chapter 3: Financial Literacy. Assets versus liabilities. Rich Dad taught one rule that changed Robert's life forever. If you want to be rich, buy assets. That's all you need to know. But most people don't even know what an asset actually is. Let me take you back to 2001 when I was 18. Remember when I started investing in the stock market? If I knew the importance of buying assets, I would have kept on investing. Let's say I invested into a low-cost index fund that tracked the S&P 500. Based on historical data, I would have achieved 10% returns on average each year. If I'd done this every month for 22 years, I would have ended up with just over £476,000. This would have led to financial freedom because I could have bought 15 rental properties in my local area. This again demonstrates the power of financial literacy. An asset puts money in your pocket, like a rental property, a dividend paying stock, or a business you don't have to run. A liability takes money out, like your personal home, your car, or credit card debt. Most people buy liabilities thinking they're buying assets. They get trapped in the rat race, working harder to pay for things that cost them more. The takeaway: know the difference. then act on it.
You might have noticed I'm in a different location because I forgot to put my financial disclaimer in. So here you goes. Here's my financial disclaimer. This video, as always, doesn't contain any financial advice. I'm literally just trying to help you with my 24 years experience as an investor.
Chapter 4. Mind your own business. You might have a job, but that's not the same as owning a business. Ray Kroc, founder of McDonald's, once said, "I'm not in the hamburger business, I'm in the real estate business." That's the mindset of the rich. Most people work for their employer, then pay taxes to the government and pay interest to the bank. They work for everyone else, but the rich focus on building their own business. Even if they keep their day job, that business is their asset column. Examples include buying stocks, investing in real estate or property for us UK investors, creating digital products like the investing courses I have within my investing community on School, see below for more info, building online income streams, etc. etc. You don't need to quit your job, but you do need to start minding your business, not just your bosses. It's not easy starting a business, trust me, I know, but it's definitely possible. And I do think anything is possible if you get your mindset right. Now, before we go any further, this video doesn't, as always, contain any financial advice. Chapter 5. The Power of Corporations. Here's how the rich legally pay less tax than you. They use corporations. Corporation is a legal entity. It doesn't get sick, doesn't need vacations, and has better tax advantages than individuals. Corporation tax flowchart. Earn, spend, pay tax versus individual earn, pay tax, spend. Poor dad paid taxes first and lived off what was left. Rich dad spent first on investments, business expenses, and then paid lower taxes. Understanding this structure, how businesses and tax work, isn't taught in school, but it's one of the most powerful tools for building lasting wealth. The school system has a lot of issues, and the main one for me is not teaching us about how to manage money, like how you can be tax efficient if you can be asked learning, reading a few books, watching a few YouTube videos. I'm not being blasé, I'm trying to tell you how important financial education is. Most people I know have money struggles. And if I'm being honest, the ones who do struggle with money don't understand it and have zero interest in learning about it. Chapter 6. Make your money work for you. Kiyosaki's big message is this: you can't work your way to wealth. You can't. You have to invest. Your mind is your greatest asset. With the right financial intelligence, you'll see opportunities others don't. Robert bought a 75,000 home for 20,000 with just 2,000 down, borrowed from a friend. He sold it for 60,000 and made 40,000 profit in days. That's not luck, that's leverage. It's using creativity, timing, and courage to generate wealth without a 9 to 5. Don't trade time for money, trade ideas for wealth. Chapter 7. Work to learn, not to earn. Most people pick jobs based on salary, but the rich pick jobs based on skills. A reporter once asked Robert how to become a best-selling author, and he said, take a course in sales. She was offended, but that was the answer. Being good at your craft isn't enough. You need to learn marketing, selling, persuasion, and management. This is something I need to improve on, if I'm being honest. I've got investing courses in my school community, but getting people into that community has been hard because most people don't want to learn or haven't got the time to learn about money, about investing. But if these same people did read books like Rich Dad Poor Dad, I'm confident they would make the time to learn how to invest. Learn a little about a lot. Diversify your knowledge, not just your income. Chapter 8. The 5 money traps. Even financially literate people fail. Why? Because of emotional traps. The 5 that keep you broke. 1. Fear. Fear of losing money paralyzes action. 2. Cynicism. Listening to negative voices keeps you small. 3. Laziness. Saying I'm too busy is often a mask for avoidance. 4. Bad habits. Paying others first and yourself last. 5. Arrogance. Thinking you already know enough. Rich Dad would say, don't say I can't afford it, ask how I can afford it. It forces your brain to solve problems. Chapter 9. What wealth really means. Kiyosaki redefines wealth in one powerful sentence. Wealth is how long you could survive if you stop working today. If your assets can cover your expenses, you are free. That's the goal, not just to be rich, but to be free. Take a bit of time to imagine how it would feel to be financially free. If I had £476,000 from the earlier example, then I would be able to buy properties and live off the profit from the rental income. Then I could spend more time with the people I love, more time doing Brazilian Jiu-Jitsu and teaching Jiu-Jitsu. What would financial freedom mean to you? Let me know below in the comments. Summary. This book isn't just about getting rich, it's about breaking free from the system and creating a life of freedom. If you got value from this little book review, hit the like button, subscribe, and let me know what's one asset you'll start building this year. And if you haven't read this awesome book, get it read and you can thank me for the recommendation in 15 years' time or maybe 20 years, depending on how you get on as an investor. Thanks for watching.